Let's give you the markets update now. The JSE looking set to start the week off on a positive note with green screens from Asia and Tencent rallying. But it could be a choppy week on the markets after Chinese authorities distance themselves from the talk of phasing out its strict COVID-19 policy. Simon Brown is Just One Lep founder and joins us now for the latest market moves. Simon, good morning to you and thanks for your time. Give us your quick overview of how the markets are shaping up in early trade after soaring and the rand firming by 2% in the last session.
Yeah, morning, colleague. We were expecting a sort of a flat to slightly green open, but as you point out, we had a massive Friday going through. Commodities were up 5% across the board. The rand had strengthened. We've actually opened this morning slightly on the back foot. We've got the top 40 market, the overall down 0.8%. We've got resources off 1.5%. It's still above where they were on Thursday after that massive gain on Friday. Banks, the only green, we're seeing slightly into the green. The rand's weakened a few cents in the last couple of hours, but we're trading 18.03 against the dollar, which is still fairly significant, about 20 cents better off where we were trading this time Friday morning. So we're ahead, but I think as you point out, there's some worries out there, and after that huge Friday, we're kind of giving back some of the gains.
Let's talk about China for a little bit. Its exports and imports unexpectedly shrank in October 2022. I suppose you could possibly argue with this one as to whether that was unexpected given the very strict COVID-19 rules in that country. But what clues does this data give us about the state of the economy of that country?
I think it tells us a lot. I mean, October was also the party conference, of course. They every 5 years they do it. Xi Jinping got an unprecedented third term. And during that conference, it is kind of, I mean, it's not state holiday, but, if there's a big shindig happening at the party conference, you're not out there having parties. You're watching on TV. You're interested, or at least pretending to be interested. But I think the key thing is we've seen it, so pretty much most of this year across China is they're growing, but they're just not doing the 5, 6, 7, even 8% GDP growth that we're used to. As you point out, imports and exports falling during October. I think a lot of this, you mentioned in the intro, is that zero COVID policy. China is still going with the policy that even just literally a handful of cases and they will shut down an area. Even if that is an economic hub, they will absolutely shut it down. And that means less production happening. It means uncertainty in that space. And there's been some talk around that zero COVID policy perhaps being abandoned. But I don't think it's going to. I mean, the short answer is that Sinovac vaccine isn't as efficient as the Moderna or the Pfizer or the Johnson & Johnson. Uptake in China has been only at about 50%. And Xi Jinping just doesn't want essentially that health crisis that we had as the rest of the world back in 2020. He doesn't want it arriving on his doorstep in 2022. So at this point, I think the zero COVID is going to stay in place for a while. And that does mean that the Chinese economy is going to be a bit stop-start in different areas. It will be going fine. There'll be some cases. They'll have to shut down. That'll hinder production. That'll hinder demand. It'll get going again. So I think this is what we're going to be seeing from China for a while until they find a solution to their zero COVID.
Let's talk company news for a moment. Rubex Group posting its interim results for the 6 months, which ended on the 31st of August 2022, and declaring a dividend. Talk us through their performance.
Actually, a really good set of numbers. A lot of the numbers we've seen come out at the moment for August, we are comparing to, obviously, last year, 2021. We were still in various different stages of lockdown. But they'd managed to fairly manage the pandemic by beginning of last year. They were up, they were operational. So there's not so much base effect here, which means that the numbers that we're seeing came out this morning are actually really, really strong. Mostly they're in the road space, tarring national roads, secondary roads around the country. But we saw revenue up some 23%. We saw headline earnings up quite strongly. You mentioned a really good dividend. If we look at construction stocks globally, truthfully, they really are under pressure and struggling. Here is a company where there's an exception. They've got a really good set of numbers. They've got a good-looking order book, and they're just getting about and doing their business and managing to do it quite profitably.
Yeah, let's conclude the conversation with Goldfields. The board there saying it stands behind the existing terms of the transaction with Yamana Gold. Your quick assessment of this development.
So this gets interesting. Goldfields put an offer in there late on Friday. Another offer arrived on the table. Yamana Gold board is saying they actually prefer the new offer. I think what's important here, Goldfields mustn't get into a bidding war. They put their best offer on the table. If the acquiree doesn't want it, rather walk away than start to offer more, because then you run the risk. Simply, you're overpaying.
Just One Lap founder Simon Brown, thank you very much for that markets update. Thanks indeed for your time.